Hello again and welcome to part 3 of my video tutorial on how to get profit by trading cryptocurrency binary options. In this lesson, I will make a brief review of the trading terminal, explain how crypto binary option trading works, and will show you how to make some profitable trades. In first two lessons, I created an anonymous trading account at btchedge.fund and put some deposit to an Ether trading balance. So now we are able to log in back to the broker. Again, it's btchedge.fund. So we signed in and now we have some trading balance on our Ether trading terminal. So we can place some trades. Um, so in the terminal we can see what contract we are trading. Now it's Ether slash US dollar 5 minutes. And we have some tabs showing us the trade terminal itself, then the trade log, which now has only one record about our deposit. We can also open the deposit tab where we can put some additional funds in, and we have a withdrawal tab where we will be taking back our profits. So let's return to trade terminal and see what we have here. On the top we have our trading balance, it's always shown there. We also have a server time right to it, and then we have a chart on our left. And we have a different resolution of the chart. By default it's 1 minute. But we can also switch, and yeah, we can also switch to different resolution, but you should remember that on whatever resolution you see, one bar or one candlestick is one time period equal to the resolution. So meaning in this 1 minute chart, one bar is 1 minute. If we switch to 5 minutes, and I strongly recommend to trade 5-minute contracts on 5-minute charts, that means that every bar or every candlestick is 5 minutes. Similarly, on 1 hour or 15 minutes or 30-minute chart, one bar represents that time. So a little bit more about the charts. If you are familiar with candlestick charts, you can fast forward from now on, but for the beginners, I'll briefly explain what that means. Very important is the color of each bar. If the bar is green, that means that the first price in that 5-minute was lower than the close price, meaning that during the time period price was moving mostly up. If the bar is red, that's the opposite. The bar opened high and closed low. You can also see on some bars small blue lines showing that sometimes there was a price during the time period, there was a price higher or lower than the opening and the closing. That means that inside the bar price was moving up and down, but the general rule is what's higher, open or close, first or last price. So if the last price is higher than the open, the first price, the bar is green, otherwise it's red. Now the current price is displayed on top of the right half of the terminal, and it also changes colors, indicating the last change of the price. If the last change was up, the price is displayed green. If the last change was down, the price indicates red. There is also a fancy timer below that. We'll talk about it right after this. This timer shows how much time is left before next strike time. So what's a strike time? What is a strike time? Generally speaking, how the binary options, especially how the 5 minutes binary options work. It's quite easy. Imagine the clock, 24 hours clock, and then think of every round 5 minutes on this clock, meaning 0 hours 5 minutes, 0 hours 10 minutes, 0 hours 15 minutes, 20 minutes, and so on, like 9 hours 25 minutes, 9 hours 30 minutes, and so on. So each of these points are strike times. So 12 times per hour, 24 hours per day, we have strike times. So the binary option trading, unlike the trading on the exchange, does not depend on difference between opening and closing price. I'll explain it in a different example. When you trade on exchange or with a broker, and you trade, for example, currencies or stocks or futures, you are trying to buy something at a smaller price and then sell it later on a bigger price. And your profit depends on the difference between your buying and selling price. With binary options, the difference does not matter much as soon as the direction was right. For example, you think that the price will go up from now on and will be higher at the strike time. In this case, you are buying a call option. That means that you think that the current price, which will be a fixed price for your contract, will be lower than the price at strike time or strike price. If, at the other hand, you think that the price at the strike time will be lower than now, you buy a put option painted red. So, again, you are betting on the direction. You're fixing a price during the allowed trading time, and then at the strike time you get in the results. The price might fluctuate a little bit, so you better find a right time to open the contract, buying the contract, either call or put. If you are if you want to buy a call contract, for example, it's better to wait when the price will be a little bit lower. But don't wait too much, because however the contract time is 5 minutes, the trading is closed at 90 seconds before the strike time, meaning that when you see on your timer that it's less than 1 minute and 30 seconds left, the trading will be closed. We'll now see how this works. You see, right now the trading is still available, but the counter is going down to 1 minute and 30 seconds, so it will be closed for this contract soon. Here it is. The timer changed color and you don't have a trading option anymore. Trading buttons and statistics. Okay, we fast forwarded to the next contract and let's now try and buy some contract because the price is now around the very round psychologically important price of 359. I believe that the price will go higher, and that's why I will be buying a call option. Now you see there is some statistics that the broker shows that more than half of the trades are already put on the call, and about 40% of the trades are placed on put, and more importantly, more money is placed on a call than placed on a put, meaning that it's likely some small trades are placed on the price down and bigger trades are placed on the price up. Now, now we need to decide how much funds we are going to place in this trade. The minimum amount of the trade is 0.01 Ether, but I'm gonna trade a little bit bigger because I want bigger profits, and I'm pretty sure that the price will go up a little bit at the strike time. So I'm going to place a bigger amount like 0.1, and I'm pressing the call button again because I think that the price at strike time in about 2.5 minutes will be higher than the current price. So I'm pressing the call button, and yep, I bought a call contract on the amount of 0.1 Ether, and I fixed the price of 359.29 as my contract price. And now here we have some graphical, more or less graphical representation of the profit and loss zones. Right now the price did not change since my entry, meaning that I'm still in the loss zone because I bet that the price will be higher, and it's not higher yet than my entry price, that my fixed price. So let's wait about a minute and a half and see how this will go. See, we're still in the loss zone because the price moved down a little bit and a little bit more, so I think it's time to be nervous a little bit. Not much, because just remember, there is no trader who wins all 100% of the trades. With trading, it's a matter of discipline and psychology. Your profit is the difference between your winning trades and lost trades. So be smart, find the better places when and better times to enter the market and make your trades. Now let's go to the trade log and see that our trade log shows that we bought a call option at that price on that amount, and our account was debited by the 0.1 Ether because we bought contract on 0.1 Ether, and we also debited for a side commission. So now our balance is 0.4489 and change, and we're about to close the contract. Yes, we sold the contract on a price that is higher than the fixed price. That means that we closed our contract with profit. We get back the 0.1 Ether that we spent on buying the contract, plus we have 50% of that amount as a winning bonus, minus a commission. So our net profit on this trade was 0.0475 Ether. And our new balance after selling the contract is 0.5964 and change. Our trade log shows that all entries, when we bought a contract, when we sold a contract, again, it's sold automatically at strike time. And it shows everything, the debit, the credit, the profit and loss, the commission, and the final balance. Now let's run a calculator and see how much we gained on this trade. So our net profit was 0.0475 Ether, and the current price is about $362 per 1 Ether. So we multiply that by 362, and our profit in dollars is $17.20. So that's quite a good result for 2 minutes of trading. $17. Good start. Now let's try and see if we can repeat that result in the next trade. So let's see the price move down a little bit, and I think we can repeat the same trade, a similar trade, make a similar trade. So half of the money is on calls, half of the money is on the put, but the amount of trades is more on put. So most of traders think that the price will go down, but I still want to put a call option again. So I'm placing the call option. Let's see, it's almost, yeah. Okay, so we put a call option again on the 358.02 price, and in less than 2 minutes we'll see the result. Again, we have bought a call contract on the same amount of 0.1 Ether. That means that if the price at strike time will be higher than 358.02, we'll receive back our 0.1 Ether plus 50% of that amount minus commission. Okay, it's 1 minute left. Let's see. Dear price, go higher, please. Go higher. At this time, it's time to relax. You cannot change anything. Just make yourself some good tea and don't hypnotize the price. Don't hypnotize the chart. It will go in its own direction. You did what you could do. You predicted the price movement. Now it's time to wait and see the results of your trade. Yeah, it's less than 30 seconds. The price is very around 358.0. It has to move either up or down. Let's see. Yeah, it already moved up and higher than our price and went back and up. So last seconds, yes, the contract closed in our favor. You see in the trade log that we now have 0.6424 Ether. So we opened the call contract at 358.02 and closed it at 358.10, meaning that we won our second contract in a row. So let's buy another one. I'm just fast forwarding the video to show you the critical points in the trading, because I see a well-established down trade starting at around 11:30 today on each 5-minute bars. But again, no matter what the direction of the bar is, the price might still go up and down inside the bar. So here we are, less than 30 seconds left on our third contract, and we are in the profit zone. Our third contract was bought at even lower, at 351.91, and that was the lowest price at the moment, with big chance of price getting up. And that happened. As you can see in our trade log, now we have almost 0.69 Ether versus our first balance of 0.55. That means that in 3 trades we made 0.139 Ether, which is about $50 on a current price, and we made this money by spending about hour and a half on the trade terminal, and we were in the actual trades for about 8 minutes. So you could see by yourself how you can make some fair profits at btchedge.fund, online broker that allows you to trade cryptocurrency binary options anonymously. Thank you.